Welcome back. Now, South Africa's retail sector showed steady resilience in October, with retail trade sales rising 2.9% year on year and a seasonally adjusted increase of 0.9% from September. Strong performances from clothing, household goods and hardware helped fit overall growth. To unpack what the latest data tells us about consumer spending and also the broader local economy is FNB's senior economist Siphamandla Mkhwanazi. Siphamandla, good to chat to you on the close this evening. Now, your overall impression, 2.9%, not a bad figure whatsoever.
Good to be on your show. Thank you for having me, Ray. 2.9, not a bad figure at all. If you look at where we were around this time last year, we were starting to see these inflows from two-pot withdrawals, which supported retail sales, particularly in the month of October and November. So at 2.9, largely unchanged. We are talking decimals here, largely unchanged from the previous month. It is still a good outcome, and especially if you look at it from a year-to-date perspective, 3.8% in real terms. That is showing a consumer that is coming back into life.
Maybe we shouldn't mention the two-pot system because it isn't easy access to money. So this time around, like you say, it's an accurate reflection about what's going on. What's driving this? I mean, textiles, clothing, it seems to be, for those two at least, things are coming up.
Right. So the broader pattern here, Ray, is that consumers are now slowly shifting away from your core essentials, and they are now starting to engage with your non-essentials. The key driver behind this is prices. If you look at implied retail sales prices, quite low at an aggregate level, and I think it's about 1.6% on a year-on-year basis. And when you look at those items, you specifically speak about textiles, very low, just below 1%. You look at furniture and household appliances, very deep into the negative territory, about negative 4% or so. Now, the key driver behind that is that we have seen, rising imports coming from the East, particularly China. So those consignments have become bigger and cheaper. You add to that the fact that the rand has been relatively stronger, and you end up with this environment where affordability has improved quite a bit. You add to that lower interest rates, which means there are more rands into the pockets of consumers, and it does appear that consumers are using this opportunity to re-engage with your non-essentials.
You see, that's interesting because they're doing exactly that. There's more money in the household spend as well. I've even heard about people getting salary increases and even bonuses this time of the year as well, which is good. So it shows that the money is there. Is it all tied into interest rates? I know you said that the imports coming in, which are cheaper, but is it those two things that are driving it this time around?
Yeah, so we have also seen with the business confidence index coming out yesterday, showing that consumers are now much more optimistic than they were at the beginning of the year when this volatility around the world erupted. And if you look at that into more detail, there is an index within the broader consumer confidence index, which measures, which seeks to ask consumers, seeks to find out from consumers whether they read the current environment, the current time, the current period is appropriate for them to engage with your big ticket items such as jewelry, such as furniture and all of those things. And that index has been notoriously negative, Ray. And we did see quite a bit of an improvement there. It is now at a level, highest level we have seen in about 6 years. The last time we saw this level was in the second quarter of 2019. So it does appear that consumers are reading the current environment as a little bit better for them to engage, particularly with big ticket items as well. And just to add on that, one of the key drivers is that catch-all category, which encompasses online shopping, but also jewelry. So you may read whatever you want to read there. We don't know exactly what is driving it, but it's those types of items that are fitted into that catch-all category.
What are your areas of concern though? Because it's great to say textiles up, clothing is up. What are you concerned about? What are you seeing that's just not there yet?
Right. So we're going to have to see the labor market performing much, much more better. I know that the latest number suggests that we added around about 248,000 new employment in the previous quarter. That is good, but our unemployment rate is still very, very, very high, meaning that there is a large number of South Africans that are still not participating in the economy. So you're gonna get those people into the economy, and to get there, we're gonna have to see much more accelerated reform. Yes, we have started to see those green shoots coming through, but we need to see a bit more acceleration on that. Now, the other side of the coin, Ray, when I spoke about imports becoming cheaper, now we are talking about the consumer here. Obviously, there's a little bit of bias on my end. We are speaking about the consumer. That is good for the affordability of the consumer. But there are also manufacturers, local businesses that are negatively affected by this.
Sure.
Now, should it get to a point where this import substitution affects their ability or their intention to hire more people, we will then start to get worried.
You're quite right, because we've seen Chinese vehicles enter into our markets. We've seen all sorts of new factors coming in. And as much as retail sales are up, it doesn't mean domestic. We need to watch what we're doing domestically.
100%. You've got that right. And we've seen this happening just all over the world, not just in South Africa, this import substitution. So policymakers will need to monitor the trends quite closely.
Siphamandla, thank you so much for coming on. I do appreciate you taking the time on the close this evening. Thank you so much.
It's a pleasure. Thank you for having me.
That was FNB senior economist Siphamandla Mkhwanazi.